All right, can you hear me now? All right, sorry about that. We'll Hello, everyone, and welcome to today's Major Markets Update, Monday, April 18th. New week, full 5 days, not 4 as last week. I hope you all had a great 3-day weekend and a happy Easter. We all caught up on some missed sleep, family time, all those good things. And we are now in a new time. Easter also celebrates spring. So spring cleaning is definitely in order. And I've also cleaned up my first slide in that I'm now just going to present a picture that aligns better with the title of today, in this sense, making sense of the somewhat messy short term. So we're going to try to clean up the short term to understand what's going to happen over the next few days to weeks. Not too much of a difference, I would say, based on where we were late last week. Let me scroll through here and start off with the NASDAQ100. The NASDAQ100 here has a ideal-based Fibonacci pattern with wave 3 normally bottoming here, wave 4 normally topping here, and then wave 5 should normally bottom here. In this case, bottoming and topping because we're looking to the downside. That would make a 5-wave move, and then some weird wave into the April 13th high. I can't figure this out. This other wave count doesn't make too much sense if I use and apply the standard Fibonacci-based impulse pattern. Again, that is our baseline we start off with. That is the baseline we're going to look for, and then the market will do the deviations to it that we have to monitor for and then adjust if necessary. This really shows you we have to anticipate, we monitor, and adjust. Then looking at the regular NASDAQ, it looks like we have an extended impulse instead on our hands, which counts much better as a wave 3 here at the April 12th low, a wave 4 here at the April 13th high, where 4 is almost equal to the length of wave 2. A nice Elliott Wave trend channel, and we should now be in wave 5. This wave 5 can go as low as the low 13,000s. All right, this is the ideal wave 5 target zone, and we've gotten so far pretty close. That then means we have to adjust the daily chart a little bit, in that the bounce high here, where my cursor is, was not 3 and 4, but instead it was the Thursday or Wednesday rally, and then Friday's decline and today's decline is wave 5 of A. As you might remember, last week on Wednesday, I said I'm starting to shorter term look for a bounce, and soon. And that soon means we're still completing this wave 5 of wave A because we're in a extended impulse lower, in my humble opinion. When things extend, they extend, of course, in time, and they extend, obviously, in price. That is something we can't know beforehand. When the impulse starts, we anticipate a typical wave 3, we anticipate a typical wave 4, and we anticipate a typical wave 5, and we monitor then to see if the market does that, yes or no, and it didn't. And then that means things are simply getting pushed forward in time and also down in price. But I think we're soon going to bottom here for this wave A, and I still expect this wave B and then a wave C for this bullish wave count to 1-2 setup. Moving on to the S&P 500. Remember, I believe on Friday or on Wednesday, I already wrote that in ending diagonals or leading diagonals, or simply diagonals in general, the market can always tag on another set of ABC. I like this wave count still, and we're getting very close to this ideal wave 5 target zone. On Friday, I said 4340 to 4360. That's the ideal wave 5 of A/1 target zone. Today, we got to 4370. Pretty darn good. So far, so good. We have now technically enough scribbles in place to consider this wave 5 done. But again, we can still tag on another ABC. All right, this looks all like ABCs. A, B, ABC. It's all ABCs overlapping. Looks for the S&P 500 like a leading diagonal lower. I still expect a bounce, and then the next set of price action to the downside. If we look here at the futures market, we have the same. The futures market has also an ideal target zone here between 43.60 and 43.28. And today we got to as low as, I believe, 43.56. So again, there are now technically enough scribbles in place to consider this diagonal complete. Don't know why sometimes this still keeps posting those lines. And so I'm still looking for this B/2 and C, 3, 4, and 5. And remember, this is based on the idea that we have completed the B wave bounce and are now in a larger C wave lower, as I've plotted here for the cash market. For the cash market, I've also added the length of wave A, and if we extend that or project that from the recent top we made late March, we get very close to this potential C5 of C, target zone for this wave 4, and then we have a simple zigzag on our hands. Okay. Now fourth waves can become very complex. This can also turn into a triangle. So we're still not out of the woods. We still have many options on the table on how this is going to progress over time. So the NASDAQ has the bullish option. The S&P 500, the futures market, has the less bullish option on the chart as well. I simply don't know yet which of the two it is. Both are equally valid. For now, both are looking still shorter term for a bounce. We got a extended wave lower in the technology sector, so the S&P 500 is kind of tagging along, so to say, but it didn't do too much of a difference compared to where I thought it would bottom. 43.40, 43.60, we got 43.70. So we can still go a little bit lower, but at some point I do really want to see this B wave develop, but I have no indication that's the case. When we get there, that is when we break above this wave 4 high, same as for the NASDAQ100, right? We need to get back above this wave 4 high. If we get above this wave 4 high on the shorter term, this little wave 4, 44.60, then we can start to look for this B wave 2 to start to complete. Futures market looks good as well for this diagonal still. So we have technically enough waves in place to consider the initiation move lower complete. And then this is the standard impulse pattern I'm going to look for to the downside. IWM remains messy. I'm sorry, I've labeled it as an ABC on Friday, but I think it counts best as a 1, 2, 3, 4, 5. I originally thought that we had a low here, but I misinterpreted the charts. My bad, it can happen, but this still looks like a completion of a wave 5A, and then a B and another C. It's very open to interpretation because we have essentially done nothing since mid-January. This is one big giant mess, so we'll have to be patient on the IWM. The semiconductors is neither following really a standard impulse pattern, looks kind of overlapping and messy on the short term. So on the short term, I don't really can make much out of this on where we should top and bottom. Looks like a C/3, then we get a 4 and a 5. If I would project that on the daily chart, it looks already a little bit better. That's why we want to zoom out. And on the daily chart, it starts to look a little bit better, where we complete then this wave 3, a 4, and a 5. Now, if this is also going to do a simple standard zigzag, then wave C equals to A, that is the anticipation, targets quite close to this ideal wave 5 of C. And that should then complete wave 4. Then we have a simple ABC. Is that then wave 4? Or is it A of wave 4? That I don't know yet. After 3 waves down, always expect at the minimum 3 waves back up. Why? Because after 3 waves down, you have done enough for a zigzag. But we can turn that, as I mentioned before, into a flat 3, 3, 5. Then with 3 down, we're going to get 3 up and then 5 down. Don't know yet if this is all of wave 4. Or we're going to turn it into a triangle, 3, 3, 3. Very possible as well. But after 3 waves down, expect at the minimum a quite decent bounce back up, 3 waves higher. We'll deal with it when we get there. I still think eventually that this wave 4 is complete. That will be my preferred count, and then the alternative count will be tracking for just a bounce. And then last but not least, the Dow Jones. The Dow Jones topped on Thursday, right here at the 61.8% retraced, exactly where it headed on the chart for this potential wave B/2. Now the Dow Jones hasn't done anything, honestly, for almost a month and a half, except for rallying a little bit higher. So here is one option that I showed. There are 4 options now possible for the Dow Jones. I can't tell you which one it is yet. I can be convinced it's one or the other, but I don't have enough price data. So this is one option, the B wave. We can also have the option that we are in the 1-2 setup A, B, and now in wave C, also very possible. And of course, we can have the option of 3, 4, 5 as well. And then the last option, though not shown here, is that this was wave A. We're now in wave B, and we're going to get another wave C. And then this is a larger A wave, a larger B wave, a larger C. You get a very complex correction, also very possible. So there's many paths on the table right now, and it's very hard to know exactly which it is. We just keep on tracking each and every one. Breakouts don't guarantee anything, but if we get the breakout, of course, then this one is preferred. So, in summary, the short-term chart suggests that the A/1 leading diagonal for the S&P 500 is about complete. And as I said on Friday, it's still unfolding, so we can strike that one. It's about complete. Okay. Again, the diagonals can tag on always another set of waves, but we're getting very close to the ideal wave 5 of A1 target zone. The NASDAQ and NASDAQ100 did, in my opinion, extended impulses lower. You can always still tag a few more waves lower, but starts to look quite close to completion as well. The Dow Jones has essentially not gone anywhere since mid-March. That means we have a lot of options on the table. That's the unfortunate side effect of Elliott Wave. When things go sideways, a plethora of options are on the table. We simply will know by breaking out or breaking down which of these options will become the preferred one. The first one is the 3, 4, 5 of 1, and that we are now in wave 4 of wave 1. That's option 1. This is not in any order of preference, honestly. We can already have completed all of wave 1, just as I showed you for the NASDAQ, NASDAQ100. We're now wave B, potentially already in wave C. Or this is wave B, and we are now in wave 2, or all of wave B completed already late March, sorry. And we're now wave 2 of wave C of wave 4. It can be in larger wave A that completed in March, now in wave B of B, etc. So we will know soon enough. If we get breakout above the late March, not mid-March, late March of mid-March high, sorry, I favor option 1. If we stall in the B wave target zone and then we drop below last week's low, I favor either option 2 or 3. And anything in between those is probably option 4, which in my own view is the least likely option. It's just presenting it to you to show you that in sideways messes we have a lot of options on the table, which is frustrating. But again, markets move from clear to unclear, back to clear again. So we have to watch for breakdowns and breakouts. The semiconductors appear to be wrapping up the C wave of wave 4 and could now be in this more tricky wave 4 of wave C pattern. The Russell 2000 and the IWM remain certainly messy and unclear, and they can be in a smaller wave 4 of a larger A wave, and then we'll see the bounce. Again, there has not been much progress since mid-January in this index, also making interpretation of the price action difficult. So again, I think the S&P 500 and NASDAQ 100 are a little clearer. I've got it very close to the ideal downside target zones. So I still expect a bounce soon. Might already start tomorrow. That's something else. Timing is not my forte, but from the waves that I've seen is that we had an extended impulse to the downside for the NASDAQ 100. So that's why looking for a low already on Wednesday has then been extended down to further in time and down in price. And that's simply something that can always happen. We start off with looking for a normal Fibonacci-based impulse pattern, and then the market can decide if it wants to follow it or not. And in this case, it didn't. Nothing we can do about. We track it and then we adjust accordingly. And eventually we'll figure it out. And I think we're getting very close to figuring it out. And then the Dow Jones, well, we'll let that one simmer and figure it out to us as well. Lots of options on the table. I wish it was different. But we'll have to wait for the breakdowns or the breakouts to see what's going on. And as usual, cash is a position too. You don't have to be in the markets all the time, especially when markets are sideways and crappy. It's not a bad idea to be underexposed, I would say. It's better to buy a strong uptrend than to buy a strong downtrend. Falling knives cut a lot of fingers. I cut my finger over the weekend but it had nothing to do with a falling market. Anyway, thank you so much for listening. Let's see if we can get some clearance over the next 2 days on the pending bounce that I'm still anticipating, and then hopefully we get some resolution, especially on the Dow Jones and the semiconductors and the Russell 2000. Please let me know if you have any questions. Take care, trade safe. See you all on Wednesday. Bye.